Hi, in this lesson, I'll be showing you how I use the commodity channel index and the outcome of every trade in using this particular indicator. There are many misconceptions on how to use our window indicator. When I'm talking about the window indicators, I'm talking about stochastics, all oscillators that are windows indicator, including relative strength index, MACD, and the rest. So there are wrong usage of it, wrong application of all of these indicators, and that is why I am making this video in order to show you exactly how I use it and the outcome of each of those indicators. Thank you for all our new subscribers. If you are coming across our channel for the first time, please do well to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. So I'll be showing you exactly the setup for this indicator. So I'm talking about relative strength index. The period is 9. You apply it to close. Here are the levels: 90, 10, 50, 20, and 80 respectively. So if you are still using the default setting, all you need to do is for you to come to this level, click on this plus sign to add a new level. Alright, then after that, you change this background color. You can see this color is the background color. The color of the indicator, you change it to the background of your screen. My trading screen is white, so I change it to white. If yours is black, kindly change the color to black. Then after that, you click on this F plus and you will add your second indicator, which is the commodity channel index. So this is the default setting. Okay, this is the commodity channel index. This is the default setting. The only thing I change here is the style, which is the color. I just change the color to black. Then you click on save. Once you have done that, your trading chart will be looking exactly like mine. So the question is, how do I use the indicator that is different? First thing I want you to take note of is that you have come across several videos where you were told that whenever the indicator gets to the level of 20 and 10 is an overbought zone. It's an oversold zone, I beg your pardon, so you are asked to buy. Alright, I'm not disputing that they are right, but at the same time they are wrong. And you were told that when it gets to the level of 90 and 80, you sell. That's good. They are right, but at the same time they are wrong. And then they go through the chart to show you previous examples of how these things plays out. But let me show you something on Crash 500. Good. Now this is Crash 500. So let's look at this scenario together. On this new day, looking at my period separator, on this new day you will realize that price has been around the level of 20 and 10, which is what you usually termed as oversold zone. And you were being told that when price is around the level of 20 and 10 is oversold, so you should buy. But look at what happened. From this day to a complete full day, price was still selling. And our window indicator is still at the level of 20 and 10. So the question is, what happened? And that is why I always say that I don't believe in anything called overbought or oversold market scenario based on indicator. I don't believe in that, and I will not advise you to trade that way. So what is the right way that I use this indicator, and how do I make profit trading it? Number one, I don't use the indicator as an entry trigger. The indicator, I don't use it to trigger my entry. I always wait first for a candlestick confirmation and then use the indicator as an additional tool for confirming what the candlestick is saying. Because if you are using indicator to make entry, it is important for you to understand that it is not indicator that moves price, right? So rather, it is price that moves indicator. So if price moves indicator, it means you need to pay more attention to what moves indicator. It is until price moves before indicator moves. Not indicator moves and price moves. So having established that fact, let's take the journey further. For instance, first, you must determine your trend. Alright? So looking at this, price has been bearish. So this is a downtrend. And then you now realize that price begins to pull back. Alright? Here now, price begins to pull back to this upside. So if I am in a downtrend and price begins to pull back, what do? I will begin to look for opportunity of selling because price is still bearish. So what are those opportunities I will begin to look out for? If you are familiar with this channel, we always say that we have point of interest, and one of it is the smart money cube. So as price is pulling back, I quickly identify my smart money cube. And this particular candle here is the candle I am referring to as the smart money cube. So having identified that, and price pull back into that zone, I now have an idea that the smart money cube most often tend to reverse price in the direction of the trend. So you see, in all of this, I am not considering indicators. So what is the next thing that happens? Price get into my point of interest. So when price get into the point of interest, the first thing we saw, this is price now in the point of interest. The first thing we saw was this bearish hammer. So when we saw that bearish hammer, it gave us a signal of a reversal. So let's look at this. That is perfect. So this bearish hammer is somewhere here. So I'm going to use a vertical line to mark that particular candle. Good. So that is our bearish. And I want to mark it out on the indicator window too. Okay, so you can see that vertical line. So that line now is on the bearish pin bar that came to the downside. Then afterwards, price again pull back to the upside. And for the second time, price gave us another bearish candle. Now, in this case, the height of that bearish candle is what I want to mark now. So you can see the height of that bearish candle now. So I'm going to delete this vertical line. Good. So you now realize that this bearish candle has equal high with the previous one. So now that the two of them have equal high, I will now look at my indicator window to see what pattern, what exactly is being formed on my indicator window. So if you look at my indicator window carefully, very careful, if you look at it, you will realize that the first high, the first high, which is this one, went above the CCI line, is above the 90. It's above the 90. But if you look at the second one, which is the second high now, you will realize that it is exactly at 90 level. So what that implies is that there is a divergence. So the only use of my CCI to me is just for me to spot divergence, to enable me identify divergence. Not that when it gets to 90 I sell, or when it gets there I buy. No, the goal of it is for me to identify divergence. And what this divergence does is that it shows me the end of a pullback. And look at this, immediately I get this divergence here, this equal high, which is serving as a divergence. Price give that candle signal, break out of this trend line, I will sell and I'll put my stop loss at this zone. And you can see how this plays out. So anytime you get divergence in line with the trend, it won't drag you. There is no delay in that process at all, not even once. In the direction of the trend, as a continuation, there is no delay. It plays out immediately. Here is another typical example. Look at this. This is a divergence. And look at this. And this. Now you realize that immediately after this candle, everything plays out. There is no delay as far as that pattern is concerned. In the direction of the trend, for a continuation, it works perfectly well. So this is exactly how you can take advantage of this in your own favor, and you will be surprised at what you will see. This is GBP USD, right? Let's see something on H4 time frame. Price is in an uptrend. So in this zone, this is our order block. This is our order block because here we have a higher high, here we have a higher low. And if you are following us, you know how to use our Bollinger Band. Price is above it, so we are looking for point of interest. Now look at what happened. Price now pulled back to inside our order block. Let's come to 1 hour time frame, and then look at this carefully at what happens here. Price pull back, right? Then look at your indicator window. You see that That is a divergence. And after these bullish candles, you see that price pushed to the upside. Why? Because this is happening in the direction of the trend. Let's come to 15 minutes. You can see that even on 15 minutes, the process is still the same thing. So this is how I use my indicator window, and you can see the result of this, how effective it is. So I don't use indicator to say that when price get to the level of 20, 10, and then it crosses the level of 20, you buy. No, that is not how I use it. I only use it to get divergence. Once I get the divergence, I will now wait for a candlestick formation on the main chart or a pattern for me to make my entry. So this is just the function of it. So the crossing of this indicator above 20 level is not a buy signal for me. That crossing that you see there is what it takes price to form that bullish signal for a buy. So please let us take note of that. And I believe you have learned something new, added to your knowledge of trading. And please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when I upload our next video. Thank you and see you in the subsequent video.